Hello and welcome. I'm Dale Gillam, the Chief Analyst here at Wealth Within.
And I'm Janine Cox, Senior Analyst. Dale and I are asked what stocks to invest in and keep an eye on.
So today we thought we'd bring you a list of our top 10 stocks to watch in the coming year.
These stocks aren't necessarily going to bring the best returns, however we believe that they could have some interesting movements throughout the year.
Now remember, this is an educational recording. It is not personal financial advice. So the stocks we talk about are there for your information and education only. Should you make a decision to buy or sell any of these stocks, then you need to be responsible for that for yourself and make sure you fully understand exactly what you're doing. Okay, let's get into the top stocks this week for the US market. And I've actually taken the top 10 from the Dow, so I've just limited it to the Dow, but we've got some really interesting stocks to look at. The first one you're going to see, if I put my glasses on, is Apple. So Apple's one of those shares that people love to talk about. I mean, obviously it's been a spectacular rise, since 2007 or after the GFC, or 2008 when it had its big low, and we can see how it very much trends well on this stock. And on your screen you can actually see I've just marked the range from the low back here in 2013 through to its high here in April 2015. I talked a little bit more about this stock on my weekly market report in the last week, so I'll talk a little bit more about this, but you can see here it fell around that 50% level. Now that says to me the stock is quite strong, and should it start to rise up, it will do quite well. And you're seeing it is moving up quite well. I still think this stock's got more room to move, and I'm still thinking it's got at least 20% to move at this point in time.
So it's gone 100%, has it, of that prior range?
It's gone just over 100% of that range, but I'm thinking the prior range that we're seeing through here didn't make 100%. So this range I'm thinking is going to go more like 150 to 150 to 175% in that sort of bracket. So if you're looking at here, if I bring up the weekly chart, you can see how it's been a bit volatile when the Dow was a bit volatile the past few weeks. So that's given us a bit more breathing space. But if I drag this down, I'm looking up around $190, $200 for Apple over the coming months, and I think that's where it'll start to look at. I'm not discounting it's going to go further, but right now it's looking quite nice as far as I'm concerned.
If it does go up and then fall away again, what do they watch for?
Well, what they're looking for is obviously that 50% level. So we'd be looking for that range from that May low back in 2016 through to there. So if I stick my super little tool on here and just go here, you can be looking at that around that $135 mark in terms of where it might likely to find support. Right now it's only fallen about 25% of that range, so if it does start to move up, that would say the same thing to me, that it is quite bullish and it will still keep rising up. The further it falls, which means there's more bearishness on that, then the less the likely rise will be out of it. If it does fall down to that 61.8% level, I wouldn't expect a big rise out of that move. But right now, if it stays through here and it starts to move through this sort of level here, that 175, it should get up to those levels that I was talking about before. Okay. The next stock we're going to be looking at is American Express, and I'm just going to bring up a monthly chart now. Generally, when we're looking at stocks, we always put the monthly chart on the left and a weekly chart on the right. So when you're looking at stuff that we're doing, you'll always know straight away that the monthly chart is on the left and the weekly on the right. All too often we find traders just focus on daily charts or over focus on it, and that really is detrimental to their trading. And really, everything you need to know, or most of the things you need to know, you can actually see and you'll learn about the stock on the monthly chart, because you really do need to look at its overall move. And it is quite critical for traders to do that. And all too often we see them being very, very micro in their view. And that really causes them to make lots of mistakes as far as direction and also strength. Now this stock, American Express, as you can see here, if I just drag it over here, it's had a beautiful run up since 2009, moved up to a high here of $96. Now if I apply the same tool that we did to Apple and just rub that onto there, you'll see here that it has fallen around that 50% mark, which again says to me that this stock, should it start to rise, that it is going to be relatively strong. And you can see here it did find support on that 50% retracement, and if you look really closely, you'll see it didn't open or close below that level. Again, that's saying it is strong. Now recently, obviously this past month, it has been a bit of weakness. So if I just expand that up a little bit, you'll see.
So that's what we did talk about in one of our other recordings. I think it was on the Australian stocks. We talked about a stock going to a new all-time high, and often that, I think it was Bellamy.
Was Bellamy's,
yeah. When they come, and often they'll come back to test support just below that all-time high before they then move on again.
And this is what it looks like this is doing at this point in time. So I think there's some really good upside on American Express at the moment. It just needs to start moving up again, and I think that's a nice little move. I think there's plenty of profit to be made on this over the coming months. There is a lot of stocks on the Dow that are looking weak, and that this one is one of the ones that is looking a little bit stronger.
It's managed to hold up well. It could still slip back below that prior all-time high, but at 96.24. But like Dale says, it's something to keep an eye on.
Okay, the next stock we're going to have a look at is Disney. Now, there's probably a lot of reasons why this stock is on our list of people, or list of stocks to actually watch. And probably the main one here is we're seeing this really nice consolidation here on that monthly chart, which is, it hasn't really fallen away, and it's had this beautiful trend up since the GFC, a nice little retracement down into that 2011. But this sort of consolidation pattern is really one of those signs that we look at for springboarding to the next run up. And Disney is, I mean, we've seen the Star Wars franchise. There's other things happening with Disney at the moment to say, well, yeah, there's a lot of potential to make a lot more profits, and obviously the stock to go up. But what would be...
Now, this is one of those stocks when we have questions on Ask the Trader from people, and one of the questions we had recently was about stocks for the kids to watch or to be interested in. No, that's one, isn't it?
This is one of those stocks, and yeah, very much so, because Disney is, they can watch all the movies. So what I'd be looking at here is, at the moment, we're seeing this consolidation into this triangle pattern, or what we call a pennant pattern. If we start seeing a breakout here above this sort of $114 level, that's when I would start to get really excited about this stock, and that it would continue to move up strongly. So it is a nice looking stock.
If it goes below, where would you be telling them to be cautious?
Well, if it starts to break below this level, so we're looking at around that $100 mark here, so especially if it goes below the low of this trough here at 96.20, if it does go below that, we're going to see it much.
$100 being a psychological level too.
Well, it is. Those round numbers tend to be quite psychological. You'll see people sitting below and above those, looking to buy or sell, depending on whether the market's coming, or market or stocks coming to those levels. But at this point in time, this stock is really in that beautiful consolidation phase, and the chances are a lot higher that it will break out the top than in the bottom, but we need to be prepared for both. But right now, I'd stick Disney on that watch list. So let's get into the next stock. Okay, now we're getting into Chevron Corporation. So again, quite a volatile stock, this one, and volatile stocks can be fantastic to trade because you can make good money out of them, but generally they tend to be a little bit harder to trade. And there are a few stocks within the Dow that I would put in this basket of ones that are a lot more volatile. And you can see here how this, if I bring up that monthly chart here again so we can see it a little bit more, the last month or so this thing has been coming down. If I just expand that up,
it doesn't trend as well as the other stocks that you're watching.
No, it doesn't. It doesn't trend as well as the other stocks that I've been watching, but it can move quite well, because you can see from 2015 through to more recently, it really doubled in price. So we hit up at 133 back in January, but if we go back to 2015, there it was 70 cents. $70 there. So it did pretty much double in price over that period of time. Now, what it is doing now, what you find stocks do is they will have a momentum, and generally they will come back to that momentum, or the angle of its trend. And that's really what I think this stock is doing right now. It did get some resistance around this high back here in from July 2014. So I think all it's doing now is just coming back to the angle, or its normal angle here, creating, as long as it stays above this green trend line and starts to move up again, I think it could be a nice little buy here.
But right now it doesn't look good though.
But right now it doesn't look good. If it does keep falling away, it could start falling away, and it could hit around to that sort of $90, $95 mark, and it could go even further. But what I'd like to see to prove that it is strong would be to turn around over this next month or so. And if it does do that, then you could have, as I said, a nice stock to own. So let's move on to the next one. Okay, Intel Corp is again, it's one of those stocks that is quite volatile, again, just like the last one we looked at here. But you can see here how it broke out of this pattern, which is, remember what we looked at Disney, it had one of those consolidation patterns. And if I put my little lines on here, you'll see what I mean here. I'll put a line here. Put another little line here, and you'll see where this nice little consolidation is. It's not quite on the right spots, but anyway. But you can see how it's broken off, and sometimes you'll see a move up out of those patterns and drop back into it. a little bit and find some support on that. That's really what Intel's done a little bit of, and you can see here in that bearishness we've had in the last few weeks with the Dow, we're saying it's gone, it had a nice little range of $6.43 on a $47 stock, so it's a nice little range. But as long as this close that we're seeing here, which is currently at 45.94, as long as it stays in the top half of that, I would suggest it would start to move up again and keep going. That said, if it does come down further, it might come down and get into this area of that $38 mark again, and find some support at that level. But at this,
that would be less likely given how strong it's risen, but we'd need to really look at the weekly chart and analyse it in a bit more detail to know whether or not it could come back to that level. So it's, we just only time will tell with this one.
Well, it is, and thanks for that, because I couldn't talk. But again, it's another one of those stocks that's really coming. It could come right back to the angle of its trend again, and that's really what we're talking about.
Some say
here.
you can talk underwater.
Some people tell me I can. My wife tells me that. So let's look at the next stock that we've got here. Okay, IBM. There's a couple of technology stocks we're looking at, obviously Apple and Intel, etc. But again, another volatile stock, and as you can see, there's a lot of gapping here on
it actually
the
looks
weekly
like
chart.
Not a very good stock to trade unless it gets into a really decent run, because look at the last couple of years, just the starts and then stops, and really could really trick traders and investors out of their cash.
It can, and you've had this big sideways move through from 98 through to 2008. What's interesting to me in this, looking at the stock, I mean, obviously IBM is a very, very old company in terms of, it's been around a long time, and it's been a staple of that industry. But you can see here, even going back further, another big long sort of sideways downish moves. It moves up, it consolidates, comes down again. But right now, it's really interesting to see where it will go, whether it will keep going south or whether it will turn around and go up. And at this point in time, to know that, we're going to have to see, obviously, this high broken at that 171.13.
Yeah, I agree.
We need to see that before it...
There's a lot of resistance around there, 170 to 180.
A lot of resistance, but if it gets through that, then we are very much likely to see it start to move up and possibly go through that $210 mark at this point in time. But at this point in time, let's just sit back and wait and see.
All right, Johnson & Johnson. Oh, that's a family brand, isn't it?
It is. It's one of those ones that everybody's got some Johnson & Johnson
Band-Aids
products and Band-Aids, talcum powder and all manner of things. But it is quite an interesting stock, isn't it? It can trend really well. And if we look at the weekly chart here on the right, it has been hit quite hard, going from that sort of 148 area right down to about 120, was that 122.
Could this be near the top?
Well, it could be, and that's the point. The angle's getting a lot steeper. So, is it near the top or is it not? And at this point in time, as I said, there's a lot of stocks that I'm thinking on the Dow are looking a little bit more like they're going to fall away. And so, if I just scrunch this up a little bit, you can see how the angle is slowly rising. So, we'll just wait to see whether it does find some support around this sort of 110 to 120 area. And if it doesn't, it could still keep moving up. But right now, I'd stay out of this at this point in time, but it's not giving me enough signals to say it's not going to continue to rise up. But it's one of the better ones. There's some of those ones on the Dow, as I said, are looking quite thick and look like they are a bit toppy and starting to fall away. But for this point in time, as I said, right now, Johnson & Johnson may give you a nice little opportunity to pick up some nice little profits over the short term. Whether it'll be more medium term and longer term, that remains to be seen.
But you want to see it start moving up first?
Yeah, I'd need to start seeing it move up first before I'd get too excited about it. But right now, as I said, there might be some nice short-term opportunities on it at this point in time. So let's go to the next stop. Right now, we've got GE on your screen, and you can see this one's been hit very, very hard over the last year or two. If we look at this monthly chart, from July 2016, and you might be going, well, why is Dale quite interested in this? And often we'll look at, which I and myself will look at stocks that have been falling for a long time, because when you get stocks as good as GE or these Dow stocks, they are in the Dow for a very, very good reason. They've got the best managers, they're big companies, they're generally well managed, they're going to have the time in the sun, and they're going to have some times like this where they're falling away and not doing what you would expect. But if we look at this stock, look at the monthly chart of this stock, we can see how it's moving down towards its 2008 low again. But you can see further back than that, this stock's all-time high was way back here in, where is that, August 2000. So really it fell from August 2000 down to that 2008 March 2009 low. And right now, all I'm doing is seeing a retest
Elliott
of
Wave
that low.
enthusiasts would be enjoying this one.
Correct. If you study Elliott Wave, you'd actually know what we're talking about here. What I'm expecting right now is for this stock to go down possibly a little bit further, and I'll just put on my price retracement tool and I'll measure this little range from here through to here, and you can see what I'm talking about. Right now it's hit through 61.8%. I'm looking at around that $12.50 mark, maybe finding support. If it doesn't, it'll find support before getting to that bottom there at $5.72. But at one point it will.
$8.90% of the rise.
And it could very much do that. And then from that point of view, then the next rise out will be a very, very nice run on this stock. Now, what I'm looking for now is a turnaround at this point in time. So again, please don't try and catch a falling knife. Right now it is falling and it will continue to fall until it doesn't. Now, that's a nice statement to make. So when is it going to stop falling? Let's have a quick look at the weekly chart before I move on. And all you need to do here is really look to see some sort of strength on your weekly chart. So what we'd be looking for is a move up, a move down, and a higher trough. And right now at the moment your low here is at 14.22. Right now that probably won't be the trough.
So you're talking about Dow theory, which we teach in our trading mentor course, is that
yeah, well, I'll be talking about Dow theory and actually looking for a retest of the low. And at this point in time, we always find it's better for stock that's falling this length of time, it's better to let it go up, come back down, retest the bottom, make a higher low, and then get into it, because there's going to be plenty of time to make some profit on this stock. Whether you get that in the next 2, 3, 4 months, I'm not sure, or whether it's put towards the end of the year, but I think over the next few years this will be a great stock to watch. Okay, now we're going to get into Nike. Now, again, when we were talking about in one of our other recordings with Ask the Expert, we're talking about getting your kids into it. Nike is one of those stocks you'd do that with, wouldn't you? Simply because a lot of the kids are wearing Nike, so they really do assimilate with the brand. And as you can see there on the left-hand side of the screen, this stock has had some phenomenal rises going from sort of in 2008 or 2009 after the GFC to around $10 to around $68 or where it's at now. So it is quite spectacular. And
another sideways consolidation.
And another sideways.
Like you had with Disney, but not quite the same shape.
Not quite the same shape. It's a little bit more a downward move than Disney, and it's not as long in time as Disney. But it's interesting enough to me at the moment. It's just popped its head through the top of this bar at 68.20, so we can see the more recent bar 69 there. So what I'm looking at here, and it's holding up at this point in time. You can see here the opens and close. If I actually enlarge that a little bit, it's done a similar
sort of thing to one of the other shares where it's gone to the all-time high and it's coming back to check.
It. So to me, that's some of the things we see as standard. So we might see a month or so down, but what we'd like to see is it holding above roughly about halfway. So if I put a little horizontal line somewhere on here, we need to see the price stay up around or above this sort of level, and if it does come down and start to move up again, it probably could break through that all-time high that we're seeing there at 68 and do quite nicely at this point in time. If it does start to get into this bottom half, then it's going to head further south and we'll start seeing, well, it'll trade well below that level of 49. So if you are in Nike shares, I'd just be watching it. I wouldn't be exiting right now. I'd just be sitting on them.
And keep buying your runners.
And keep buying the runners, yeah. I mean, they're very expensive runners, aren't they? So the last stock we're going to have a talk about today is Walmart, and it is looking... well, it's going through an interesting period at the moment, obviously, with the movement down that we've seen on the Dow more recently.
I think if anyone's ever been to America, they will know who Walmart is or what it is.
Well, obviously, I mean, have a look at that sideways move that it made for, way right back into this high back in January 2000, all the way through to 2010. This is a big sideways move. It's come up and retested that again. That's sort of what we're talking a bit about before. Sometimes when stocks start to move up, they'll come back and retest those sideways movements. So right now we're looking at this nice little run up, and you can see how vertical it's gone. Really, it's just coming back. It's sort of overheated in this run. It's just coming back. So
it's a really strange stock.
It is a really strange stock.
The only other stock that I can recall seeing go sideways for that long and not breaking through the high like that and not be too volatile is Wesfarmers. We know that Wesfarmers has been tracking sideways in the Aussie market.
Wesfarmers in Australia, yeah, and it does do that.
But this is really strange, isn't it? It is an interesting stock and a good one to watch from a learning point of view too.
So where we'd look at this stock, if I just expand that up for you and just bring that out a bit, what I'd be looking for with with this stock at the moment here is just looking at making sure it doesn't fall too much further. So I'd be looking at holding above that $83 level. If we can do that and start to move back up again, and then I would suggest it would go through that $109 level. But right now it's a little bit too early to tell. It could come all the way back to that 61.8% level at $76. But again, I'm not really sure that it would stop there. If it did get down to that level, I think it's probably going to go right through, down to that $69 or even further. But at this point in time, it's worth watching and keeping an eye on this stock, because if it does start to turn around, you could make some nice money out of it quite quickly.